Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. Several subscribers asked me to analyze AMD stock. So in this video, I'm going to analyze AMD stock and explain whether I think AMD stock will be the best AI stock after Nvidia. Before I start, I always like to give you some context first. At the time of making this video, AMD stock has recovered a lot over the past 1 year. The biggest reason is that AMD is expected to benefit a lot from the current generative AI trend. Generative AI applications such as ChatGPT are expected to transform many industries going forward. There are only two major companies in the world that are making AI GPUs for AI applications. The first biggest player is Nvidia, and the second player is AMD. Intel is far behind Nvidia and AMD in both AI GPUs and AI software stack. If you follow my YouTube channel, you may have watched my past AMD stock analysis videos. I have been very bullish on AMD for at least the past 2.5 years. For example, I made these 3 AMD stock analysis videos in the past 2.5 years. Back in May 2021, I said that AMD was undervalued. Now you can see that AMD stock has performed very well even after this large tech stock sell-off in 2022. Just to compare, over the past 1 year, you can see that AMD stock did outperform the S&P 500 by a very large margin. Also, in the past 3 years, even including this large tech stock sell-off in 2022, AMD still recovered and outperformed the S&P 500 by a good margin. Obviously, past performance does not guarantee future results, so it's very important that we look at AMD's biggest risk and long-term growth prospects going forward. So in this video, I'm going to talk about whether I think AMD stock is the best AI stock after Nvidia. First, I will give you a quick update about one of my growth stock portfolios. After that, I will talk about AMD's business and the biggest risk going forward. Is AMD the best AI stock after Nvidia? AMD stock valuation, and will I buy AMD stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent investing and stock analysis videos every week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become millionaires through investing. Once you become a Patreon member, you can follow all the stocks I'm investing in for the long term and download the latest intrinsic value calculators for all the stocks I'm analyzing. So you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. Before talking about AMD, I want to give you a quick update about this growth stock portfolio here. This is one of my personal growth stock portfolios. I also have other portfolios that have almost the same stocks and the same investing strategy. In many of my investing videos, I always use this portfolio to show you how I invest over time. Here, you can see that this portfolio has done very well. In fact, this portfolio has outperformed the S&P 500 by a large margin over the years because I have invested in many of the best businesses that are most competitive in their sectors. For example, I have invested in Apple, Adobe, AMD, Amazon, Alphabet, Intuit Inc., MasterCard, Microsoft, TSMC, and Visa. Many of these companies are already multi-bagger stocks. Almost all these companies have very large economic moats, great products and services, great management, great long-term prospects, increasing earnings, and increasing free cash flow over time. I also buy them only when they're fairly valued or better when they're undervalued, so that's why many of them have become multi-bagger stocks. Now, this does not happen overnight. It does take a lot of patience to wait for them to become multi-bagger stocks. I do sell some stocks from time to time to take the gains if I can reinvest the capital in better opportunities that are more undervalued. For example, over the past 1 year, I sold some AMD shares and made a decent gain here. I also sold some Tesla shares and made a good gain here. I decided to sell some AMD and Tesla shares because I wanted to reinvest the gains in other great companies that were much more undervalued at that time. This strategy has worked very well for me for many years. So here's a summary of my long-term investing strategy. The most important thing is to invest in what you know and stay away from any businesses you don't understand. Don't speculate and don't gamble your money on things you don't understand at all. Then you have to invest in very good businesses, preferably the best businesses that are the most competitive ones in their sectors. You have to make sure you buy them when they're undervalued, below their intrinsic values. It doesn't make sense to buy stocks when you know that they're overpriced above their intrinsic values. As long as you keep investing in the best businesses that are undervalued, your portfolio is going to perform very well over the long run. Let's go back to AMD here. I want to talk about AMD's business and the biggest risk going forward. Before we look at AMD's biggest risk, we have to understand AMD's business first. AMD is one of the largest semiconductor companies in the world, behind Nvidia. AMD specializes in designing high-performance chips for data center customers, PC users, PC gamers, console gamers, and many large system builders and enterprise customers. AMD doesn't manufacture its chips. In fact, AMD has to outsource chip manufacturing to TSMC and Samsung Foundry to make chips. AMD has these four major business segments: data center, client computing, gaming business, and embedded business. Here you can see that AMD makes data center chips such as high-performance server CPUs, AI GPUs, few programmable gate arrays FPGAs, data processing units DPUs, and adaptive system on chips SoCs. AMD also makes CPUs, APUs, GPUs, and custom system on chips for consumers and large enterprise customers. For example, AMD makes the system on chips that power the PlayStation 5, Xbox Series X, Steam Deck, ROG Ally, and many Windows handheld PCs that are very popular right now. These are AMD's most important products that will drive AMD's revenue growth going forward. Most of AMD's products will be AI accelerated going forward. For example, at the time of making this video, AMD's most important product is its MI300X AI GPU, which will compete directly with Nvidia's most powerful AI GPUs, such as the H100 and the upcoming H200 AI GPU. AMD is also planning to bring many AI technologies to many of its processors, such as the Ryzen processors for consumers and EPYC processors for data center customers. Going forward, many of the AI tasks such as AI inferencing will be done on the edge and on our local devices such as our smartphones and our laptops. So AMD is including many AI technologies on their chips going forward. I think it's very important to understand this trend because AI's accelerated PCs and AI accelerated mobile devices will be one of the biggest growth opportunities for AMD going forward, not just AI applications from the cloud. I want to show you AMD's financials here so you will know AMD's biggest growth opportunities going forward. Here you can see AMD's revenue is well diversified into these four major business segments: data center, client computing, gaming business, and embedded processor business. Going forward, AMD's biggest growth opportunities will be from the data center business. This is very similar to Nvidia. Nvidia's most important business is its data center business because of the enormous demand for generative AI applications, large language models, or other AI workloads such as AI training and AI inference. I believe AMD's data center business will eventually be much bigger than its client computing business and gaming business going forward. This is because of the enormous demand for generative AI applications and the very large demand for AI GPUs that are used for AI training and AI inference of large language models. I'll explain more about this throughout this video. Here's a very important part of AMD's data center business. Traditionally, most of AMD's data center revenue is from selling high-performance EPYC CPUs for data center customers. Now, AMD has shifted its main strategy to focus on making the best high-performance AI GPUs and AI APUs as well as the AI software stack for data center customers, large enterprise customers, and AI startups. For example, during a recent AMD AI event, AMD announced its MI300A APU and its MI300X GPU. Both of them are very high-performance AI accelerators. AMD has started shipping these latest AI accelerators to customers recently. AMD expects that they will ship at least $2 billion worth of MI300 AI accelerators next year in 2024. AMD claims its MI300X GPU is even faster than Nvidia's most powerful H100 AI GPU, especially in AI inference. I think AMD's biggest risk is this: even if AMD has the most powerful AI GPU in the market right now, Nvidia will release the next gen H200 AI GPU in the second quarter of 2024. After that, Nvidia is planning to release the even more powerful Blackwell B100 AI GPU by the end of 2024. This means AMD's MI300X AI GPU may not be as competitive as Nvidia's upcoming H200 AI GPU, which will be released in the second quarter of 2024, and Nvidia's upcoming Blackwell B100 AI GPU, which is expected to be released in the fourth quarter of 2024. According to Nvidia is planning to have a one-year cadence going forward. This means Nvidia will release one new AI accelerator architecture every year instead of one new architecture every 2 years. This is very important because Nvidia will likely still stay well ahead of AMD when it comes to AI hardware and AI software going forward. If AMD doesn't have a 1-year cadence like Nvidia, AMD's AI GPUs will eventually be behind Nvidia again. This is why I think this is AMD's biggest risk in the AI server market going forward. I want to show you more financials here so you will understand AMD's other risk. Like most semiconductor companies, AMD's business is by nature very cyclical. For example, in the past 1.5 years, there has been a huge downturn in the PC market. Many companies have too much chip inventory. Also, PC sales have slowed down a lot after the peak during the pandemic. This is why AMD's revenue growth, free cash flow growth, and free cash flow margin did drop a lot between 2022 and 2023. At the time of making this video, the PC market has normalized and is getting back to the regular seasonal levels. Going forward, the PC market is expected to recover more in 2024. As long as the entire PC market is recovering, AMD's revenue growth will return again. Also, AMD started selling MI300 AI accelerators to large data center customers, enterprise customers, and AI startups, so we can expect that AMD's revenue growth will likely recover a lot starting in 2024. I want to show you AMD's GAAP operating margin here. You can see AMD's GAAP operating margin has decreased substantially since the peak in 2021. This GAAP operating margin is actually misleading. Here's why. AMD made a very large acquisition back in early 2022. AMD acquired Synnex for $48.8 billion back in February 2022 and recorded $27 billion of intangible assets. Every quarter, AMD has to expense this very large non-cash item called amortization of acquisition-related intangibles. Again, this is a non-cash expense item from acquiring Synnex back in 2022. We have to look at AMD's non-GAAP operating margin going forward and not AMD's GAAP operating margin. Looking at AMD's GAAP operating margin would not make sense because of this large non-cash expense item called amortization of acquisition-related intangibles. At the time of making this video, AMD has a very strong balance sheet. AMD has around $5.8 billion in cash and short-term investments. Just to compare, AMD has around $2.86 billion in debt and long-term operating lease liabilities. This means AMD can essentially pay off all its debt and operating lease liabilities and still have around $2.94 billion of cash left. So is AMD the best AI stock after Nvidia? This is my own prediction based on my analysis. I think AMD is one of the best AI stocks after Nvidia. Here's why. Nvidia's Jensen Huang said this in an interview with the Columbia Business School a few months ago. He said it took around 16,000 Nvidia GPUs to build a GPT-4 large language model that's used for ChatGPT. The 16,000 Nvidia AI GPUs cost around $1 billion. This is only from one company called OpenAI. There are many other companies that buy AI GPUs from Nvidia every year. This is why Nvidia has become the most profitable semiconductor company in the world, and of course a $1 trillion company. The AI GPU market needs another major player like AMD. In a recent AMD AI event, AMD CEO Dr. Lisa Su said that she initially estimated that the data center AI accelerator market would grow approximately 50% annually from $30 billion in 2023 to $150 billion in 2027. Now, she believes that the data center AI accelerator market will grow approximately 70% annually from $45 billion in 2023 to as much as $400 billion in 2027. She said this. Now, the key to all of this is generative AI. It requires a significant investment in new infrastructure, and that's to enable training and all of the inference that's needed. And that market is just huge. Now, a year ago, when we were thinking about AI, we were super excited, and we estimated the data center AI accelerator market will grow approximately 50% annually over the next few years, from something like $30 billion in 2023 to more than $150 billion in 2027. And that felt like a big number. However, as we look at everything that's happened in the last 12 months and the rate and the pace of adoption that we're seeing across the industry, across our customers, across the world, it's really clear that the demand is just growing much, much faster. So if you look at now to enable AI infrastructure, of course, it starts with the cloud, but it goes into the enterprise. We believe we'll see plenty of AI throughout the embedded markets and into personal computing. we're now expecting that the data center accelerator total addressable market will grow more than 70% annually over the next 4 years to over $400 billion in 2027. In the most recent earnings call, AMD's management gave this guidance. AMD expects that they will sell at least $2 billion worth of MI300 AI accelerators in 2024. These AI accelerator sales will be on top of AMD's traditional server CPU sales. This means we can expect AMD's data center business will likely recover a lot in 2024. More importantly, Dr. Lisa Su stated that AMD has a significant supply of AI chips that is well above $2 billion worth. She said, "There's a lot of supply that we have, and we have a lot of customers, well above the $2 billion as well." I think this indicates that AMD will likely sell more than $2 billion worth of AI chips in 2024 because there's a huge shortage of AI GPUs right now. Nvidia cannot meet all the demands from customers, so AMD is the next best alternative for many customers who want to buy AI GPUs to build their large language models. This is an important part here. According to Reuters, analysts estimate that Nvidia has captured roughly 80% of the AI chip market when including the custom processors from Google and Microsoft. Amazon, Google, and Microsoft are making their own in-house AI chips mainly for their internal workloads. They do not sell their AI chips to other customers. This means Nvidia essentially has more than 90% of the AI chip market when we exclude the custom AI chips from Amazon, Google, and Microsoft. This from CNBC. Citi analysts estimated that AMD may be able to capture about 10% of the total AI chip market. Realistically, I think AMD will capture a small percent of the AI server or AI chip market since not all companies want to buy AI GPUs from Nvidia. AMD's AI GPUs are the best alternative to Nvidia's AI GPUs. Even if the AI chip market grows to approximately $150 billion instead of $400 billion in 2027, AMD capturing 10% of the AI chip market means AMD could potentially grow its AI chip sales from $2 billion in 2024 to over $15 billion in 2027. Again, these AI chip sales will be on top of AMD's traditional server CPU sales. So this is why I believe AMD's data center business will be the biggest revenue growth driver for AMD for at least the next several years. Here's the deal. The barriers to entry to the GPU market are extremely high. There are only two major players in the world that make the most powerful high-performance GPUs for data center customers, data scientists, AI researchers, large enterprise customers, and consumers. There are Nvidia and AMD. Intel is still far behind Nvidia and AMD in both the data center GPU market and the consumer discrete GPU market. Amazon, Google, and Microsoft also make their own custom AI GPUs, but their AI GPUs are mainly for their internal workloads. They don't sell their GPUs to other companies. Nvidia has a near monopoly with over 90% of the AI chip market. Most AI researchers, AI developers, and data scientists use Nvidia's AI GPUs and CUDA software platform to build their AI models and AI applications. In fact, Nvidia has a huge head start in both AI hardware and AI software. Nvidia's general-purpose parallel computing platform called CUDA is widely used by most AI researchers and AI developers. CUDA is the largest ecosystem and software platform for machine learning, deep learning, AI training, and AI inference, and many other AI applications. CUDA only works on Nvidia GPUs, so this gives Nvidia a huge competitive advantage over AMD. For example, if you want to use CUDA to build your own large language models, you are essentially forced to buy Nvidia GPUs instead of AMD GPUs. AMD's biggest weakness is its software platform for AI applications. AMD has its own parallel computing software platform called ROCm that competes directly with Nvidia's CUDA. Based on what I know, AMD's ROCm is still far behind CUDA when it comes to software optimization. ROCm is not as popular as CUDA in machine learning and many AI workloads. The biggest advantage of ROCm is that it's open source, so I think it'll be a good alternative for many AI researchers if they don't want to use Nvidia's CUDA and Nvidia's AI GPUs. Going forward, AMD is planning to make ROCm much more optimized for AI applications, specifically large language models, AI training, and AI inference. Also, AMD has been acquiring more AI software platforms in order to compete with Nvidia's CUDA. For example, AMD recently acquired the open source software called Node.ai and another AI software company called Mapsology. So there will be a lot of competition between Nvidia's CUDA and AMD's ROCm parallel computing platform going forward. This is my own prediction. Over the long run, I think it will be a two-horse race between Nvidia and AMD in the AI server market or the AI chip market. AMD is the closest competitor to Nvidia when it comes to making the most advanced high-performance GPUs for AI applications. This is very similar to the consumer discrete GPU market. According to the Steam survey here, you can see the discrete consumer GPU market is essentially a two-horse race between Nvidia and AMD. The discrete GPU market has been a two-horse race between Nvidia and AMD for many years. Nvidia often has around 80% to 90% of the discrete GPU market, while AMD often has around 10% of the market. The AI server market needs another major player like AMD, so Nvidia will not have a monopoly. Many companies want another major player like AMD to make the best high-performance AI GPUs and to have a software stack that's at least comparable to Nvidia's CUDA. If Nvidia is the only AI GPU maker in the world with a 90% market share, Nvidia can effectively charge as much money as they want. Just to give you an example, each Nvidia H100 GPU can cost well over $30,000 on the secondary market because there's a huge demand for AI GPUs and Nvidia cannot satisfy all the demand. This is why the AI server market needs another major player like AMD to compete with Nvidia. So AI researchers and AI developers can buy from AMD if Nvidia's AI GPUs are too expensive. If I had to make an educated guess, in the AI server market, I think Nvidia will likely maintain the highest market share between 80% and 90% over the long run, while AMD may be able to capture around 10% of the market. So this will be very similar to the discrete GPU market I showed you earlier. I want to show you these consensus revenue estimates from Seeking Alpha. AMD's revenue is expected to decrease slightly in 2023, mainly because of the large chip inventory correction in 2023. Also, PC sales have slowed down a lot in the past 1 year. Going forward, PC sales are expected to recover a lot more starting in 2024. This is why AMD's revenue is expected to grow much faster going forward. Here's the important part. If AMD can capture, let's say, 10% of the AI server market by 2027, I believe AMD's revenue growth will be much higher than these revenue estimates over the next 5 years, mainly because of the large demand for AI chips, large language models, and generative AI applications. I think we're only in the beginning of generative AI and other major AI breakthroughs, such as artificial general intelligence (AGI) and AI robotics, that will require a lot more powerful AI GPUs for AI training and AI inference. I want to show you how to calculate AMD stock's intrinsic value here, so you will know when AMD becomes undervalued, fairly valued, or overvalued. If you want this calculator, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define AMD's intrinsic value as its future free cash flows discounted to the present day. I use the discount rate of 11% here. You can use a higher discount rate here if you want to be more conservative. Based on the biggest risk and the long-term growth prospects I talked about earlier, I believe AMD's revenue growth will drop slightly in 2023 because of the large chip inventory correction in the past 1 year. After that, I believe AMD's revenue growth will grow at a CAGR between 10% and 15% annually over the next several years. I think these growth estimates are conservative. If AMD captures 10% of the AI server market, AMD's revenue growth will be much higher going forward. This will be the best case scenario for AMD. Let's go over these 3 case scenarios here: worst case, normal case, and best case scenarios. Under the worst case scenario, we're forecasting that AMD's revenue will drop around 5% year over year in 2023. After that, we're forecasting that AMD will grow at a CAGR of 10% over the next several years. If we forecast AMD's free cash flow over the next 5 years and discount the free cash flow to the present day, AMD's intrinsic value should be around $205 billion for the entire company, or $126 per share. I'm giving this scenario a 25% probability here. Under the base case scenario, we're forecasting that AMD's revenue will drop around 4% year over year in 2023. After that, we're forecasting that AMD will grow at a CAGR of 12.5% over the next several years. AMD's intrinsic value should be around $226 billion for the entire company, or $138 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're forecasting that AMD's revenue will drop around 3% year over year in 2023. After that, we're forecasting that AMD will grow at a CAGR of 15% over the next several years. AMD's intrinsic value should be around $248 billion for the entire company, or around $152 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, AMD's intrinsic value should be around $139 per share. I also used the forward price to sales valuation model here to estimate AMD's intrinsic value, which should be around $179 per share for the entire company, or around $110 per share. If we take the average of both valuation models here, I believe AMD's intrinsic value should be around $124 per share. Just to compare, Morningstar gave AMD a very similar fair value of $125 per share. AMD was undervalued for a long time in the past 2 years. Now I believe AMD is overvalued at the time of making this video. So will I buy AMD stock? Yes, I will likely buy more AMD going forward once it becomes undervalued again. I always like to invest only when the stock is below its intrinsic value. I bought AMD several times in the past when it was undervalued. I also sold some AMD shares and made good gains before. I will also buy more Nvidia going forward once Nvidia becomes undervalued again. This is my prediction. This is not advice. Over the long term, I think it will be a two-horse race between Nvidia and AMD in the AI chip market. I believe Nvidia will still have the largest market share between 80% and 90%, while AMD should be able to capture a small percentage of the market, perhaps 10% of the AI server market over the long term. This will be very similar to the discrete GPU market. Now, all these are only my opinions and my analysis based on my research. They are not financial wise. There are always risks associated with investing. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.